Hello, everyone, and welcome to today's webinar on CPACE retrofit financing for EV charging infrastructure. We are very excited to bring you this presentation today. My name is Robert Schmidt, and I am introducing my colleagues here today, but just wanted to go over a couple of housekeeping rules. If you do have questions or anything that you need to ask us about throughout the presentation, feel free to put those questions in either the question or chat feature in the GoToWebinar window here. We have our team looking at those questions, and we'll make sure to address any questions that you have. Secondly, we will be recording today's webinar, so we will be providing those slides to you, as well as a recording link to the webinar in the days following this presentation. So with that, I'm going to present my colleagues Elise Lembo-Bazzelli and Catherine Duncan, who both work on our CPACE program. They're going to walk you through this exciting new option for EV charging infrastructure today.
Great. Thank you, Rob. And good morning, everybody. Thank you all for joining. My name is Elise. I will be starting the presentation, and Catherine and I will kind of be tossing it back and forth as we go through. But just to quickly go over our agenda here, we'll do some quick introductions. We'll talk about the Connecticut Green Bank. Then we'll talk about the CPACE financing program. And we'll also then get into some of the tools and the marketing support that we have available. And then, of course, we'll give you all of our contact information at the end. We will have a pause at the very end for questions, but as Rob mentioned, feel free to put any questions that you have in the chat or in the questions feature. We'll be able to answer those as we go, but of course, we'll have time at the end as well. So just to quickly talk about the Connecticut Green Bank here for a second. So the Green Bank, we're a quasi-state agency, and we were founded with the main mission of trying to deploy clean energy in the state of Connecticut. We do that by leveraging the public dollars that we get to try to attract private capital investment into our programs and into the state. So we administer a number of different programs. We create them and administer them, again, in the hopes of attracting those investors to come in and actually fund different projects that we have here in the state. And so this just gives you a quick overview of the different solutions that we offer. So we've got home solutions for homeowners, residential solutions. We've got investment and community solutions. But today we're going to be focusing on the building solutions section, and with our main financing program that we have available to commercial properties called CPACE. So quick overview of what is CPACE. So CPACE is an acronym. It stands for Commercial Property Assessed Clean Energy. And CPACE is financing that's available to commercial properties for green solutions. Commercial properties include really anything that is not a residential property or a municipal or state property. So think of the traditional commercial properties that might come to mind, like office buildings, industrial facilities, retail, hotels. All of those things fall under the commercial category. Multi-family properties of 5 units or greater are also considered commercial, as well as nonprofit facilities. So things like houses of worship, community centers, YMCAs. All of those things fall under the commercial category. So again, no residential for CPACE, no municipal properties, no state properties, but pretty much everything else falls under that commercial umbrella. And go back to that slide. There we go. Green solutions, that traditionally with CPACE, we've focused mainly on clean energy projects in the past. But very recently, and the reason we're doing this webinar today is we've expanded the statute for the CPACE program in Connecticut to include 2 new things. EV charging infrastructure, and resilience measures. So EV charging infrastructure has been included into the available measures that can be financed through CPACE, as well as resilience. We're still working on putting together some resilience guidelines, but the EV charging infrastructure guidelines are out there and ready to go. So we're excited to start these projects with you all. So the CPACE program, this is kind of this next box here that talks about the financing. This is kind of where CPACE diverges a little bit from the traditional construction loans that you might be familiar with from your local bank. So we can offer long terms, up to 25 years of financing. And we also can typically finance 100% of a project. So usually with you know, local bank, you might be getting a 5 or a 7, maybe a 10-year commercial loan, and usually you're putting some money down. With the CPACE program, like I said, most of the time we're able to finance 100% of that project. The really kind of the big thing for EV charging infrastructure that's going to be different from the traditional way that we've done CPACE in the past is that there's no savings requirement for EV charging infrastructure projects. Previously, and with all of our energy projects, so things like energy efficiency or renewable energy projects like solar PV, there's a savings component that needs to be measured and reported on to the Green Bank to make sure that we're meeting what's called a savings to investment ratio. Essentially, we want to make sure that the energy measure is going to save you more money over the life of that equipment than you're going to be spending on your actual repayment. With EV charging infrastructure, we've exempted that from needing to pass that savings to investment ratio requirement. So Catherine's going to talk about that a little bit more in a few minutes. But generally speaking, that's, you know, a big change and something that really is going to make EV charging infrastructure financing a lot more accessible for folks. And then these last two boxes here, the owner repays over time through a senior assessment, and the assessment stays with the property regardless of ownership. Again, these are some of the other things that kind of make CPACE a little bit different than a traditional loan. So the CPACE assessment, as I mentioned earlier, property assessed clean energy. It's an actual assessment that gets placed on the property, very similar to a municipal assessment. So think of like a water or a sewer assessment, you know, city water, city sewer. So that's how the actual financing is repaid, is through this assessment. It stays with the property regardless of who owns it. So again, just like a water bill, for example, if you have, let's say you have a 20-year CPACE loan, but in year 5, you decide you're going to move your business to, you know, a building down the street, and you sell your building to another property owner. Instead of having to pay off the remainder of your CPACE assessment, all you would need to do is make sure you were current on your CPACE payments at the time of sale, and the new owner would come in and continue to make those payments. All of the equipment, you know, whether it's EV charging infrastructure or maybe there's some additional energy measures that are also included in your project, all of that equipment is going to remain with the property. And so therefore, all of those payments and all of the benefits that come along with those measures will also remain. So again, you know, different from a traditional construction loan. Okay, we can go to the next slide. So I will pass it over now to my colleague, Catherine, who will talk a little bit more about the specifics. Catherine.
Thank you, Elise. Hi. Hi, everyone. I'm Catherine, and I'm also with the CPACE program. So as Elise said, EV charging is exempt from our SIR requirement because EV charging equipment uses energy rather than saves energy. But because EVs helped reduce the carbon footprint, expanding their adoption aligns with the Connecticut state goals. So our statute last year exempted EV charging from that SIR calculation, that savings to investment ratio. But it did not exempt them from requiring an energy audit. Every CPACE project by statute must have an audit submitted to the Green Bank for review. If you move on to slide 10. Okay, these are some of the reasons why businesses are installing charging stations at their location. I'm sure there's loads of others, but so far this is what we've been hearing. And we can go on to slide 11. Okay, so this slide shows a good overview of the variety of CPACE projects, property types, and project sizes. You'll see over on the left that 30,000 is the smallest CPACE project that we can do. A standalone EV charger after incentives and grants may not need as much as $30,000. And so the Green Bank wouldn't be the right resource for a standalone charger that is incentivized to the degree that it's you need your shortfall is less than 30,000. But anything from 30,000 and above, we can handle for you. Okay, and the Green Bank has successfully pioneered a methodology to mint carbon credits from EV charging activity, and that can provide an additional revenue stream for charger owners. For more information on this, we want you to contact Eric Schrago with the Green Bank, and we'll have his email at the end of the presentation, and also you'll get it in the slides. Next slide. And Elise, I think this is back to you.
Yeah, thanks, Catherine. So just wanted to also kind of talk through some of the additional stakeholders that are part of the CPACE program. So one of the big ones, of course, besides the Green Bank, are building owners, the property owners that are looking to finance projects, and of course the contractors that are actually doing the work and installing them. But these are some of the other folks that are kind of in the background that we wanted to just touch on quickly and make you all aware of, so you kind of have a whole picture of what the CPACE program is. So the first one here, the mortgage holder. So in the very first slide, the what is CPACE slide that I covered, I mentioned that the CPACE assessment, we talked about how CPACE is an assessment. It is a senior assessment, which means that it would come before any existing debt that's on the property. So that's always kind of a scary thing for folks to think about when there's an existing mortgage holder and they have to, there's a conversation with them where they have to, subordinate to another loan. But we actually have had some really good success with this in the last 10 years. CPACE program's been around for about 10 years. We're at like a 92 or 93% success rate with getting consent. Over 50 different lending institutions in Connecticut have consented to CPACE. And really the main reason for that, I think in my opinion, is this fourth bullet point down in that category there. So the CPACE assessment is non-accelerating. Really what that means is that even, let's say, worst case scenario, the mortgage holder needs to foreclose on the property and you have $1 million CPACE assessment on that property. The only portion of that assessment, the CPACE assessment, that would in fact come before the mortgage in that foreclosure event would be anything that is late or anything that's unpaid, in arrears, essentially. So when you think about that, and when a mortgage holder thinks about, okay, how long might we go before we would foreclose? How long would we let a property owner not pay us a mortgage payment until we foreclosed? Really, that's a year, maybe 18 months, maybe 2 years at most. So the amount of CPACE dollars that would come before that mortgage is going to be a lot lower than that full $1 million. So the risk to the property owner, to the mortgage holder for consenting to subordinate, once they understand that non-acceleration part of the assessment, becomes a lot lower. and they can usually get pretty comfortable with that. But of course, there's other benefits. You know, so if you're doing an energy project alongside your EV charging infrastructure project where you're actually saving money, you know, through energy efficiency improvements or maybe a renewable energy installation like solar PV, you know, you're improving your cash flows, or the building owner is improving their cash flows. And of course, you know, regardless of what you're installing, EV chargers or other clean energy measures, you're improving the property. You're making it better. It's more attractive to tenants, as the slide that Catherine just showed. You're making your tenants or your employees more comfortable and happier with where they're working or living. So lots of benefits to the CPACE program in that sense, and in terms of the measures that we can finance. And again, we've had a lot of success with mortgage holders on that. So again, if there's any existing property secured debt, then we would need to work with the property owner and their bank to have their bank consent to CPACE. And then this next one here, the capital provider in the middle. So we mentioned at the very beginning that the Green Bank administers a lot of different programs here in Connecticut. CPACE is in that category. The Green Bank is the statewide administrator for the CPACE program here in Connecticut. We also wear another hat, where we are also a lender or capital provider in the CPACE program, which means that we're able to actually finance the projects that come through and actually provide the capital for that. We are one of about 20 different capital providers that are eligible to lend in the CPACE market in Connecticut. We talked about, you know, in the very first slide about how, you know, really the goal of the Green Bank is to try to attract private capital investment into our programs, and that is something we've been able to do with CPACE over the years, which is really exciting. We're very proud of that. So again, Green Bank wears two hats. We are the statewide administrator, and we are also able to lend in the CPACE program. And then this last one here, municipalities. So because CPACE is a statewide program, that means that it's the same in every town that you go to. So it doesn't matter if you're working in Hartford or Stamford or Waterbury, the CPACE program is going to be the same. Requirements are going to be the same. But because it is a statewide program, we require that each individual town or taxing authority needs to opt into the program. And really all that means is that the town needs to sign a resolution with the Green Bank that says, yes, we are allowing our eligible properties to participate in this program if they'd like to. So we've had just about 140 towns come on board, and that's out of 169 municipalities in the state. So we're getting up there. We're almost to 100%. You can see that map down there. I know it's small, but a lot of the towns that are not opted in yet, which are the ones that are that kind of light peach color, most of those towns have not opted in just simply because there hasn't been a project there yet. So if you're working in a town, or if you have a project in a town that maybe is not on our list, which we do have a full alphabetical list up on our website that we can send around afterwards in our email follow-up. But if you are working in a town that is not on that list yet, just let us know, and we can start working with them to join the program as soon as possible. I will say it always is helpful if there's an existing project, or if there's you're trying to get a project off the ground in the town that we're trying to get on board. So certainly just feel free to reach out to us about that. All right, next slide. So tools and resources. So I'm going to hand it back over here to Catherine, so she can talk through this.
Thank you, Elise.
Oops, okay, sorry, looks like we left the edit in there. Sorry about that. We'll take that out before we send these slides.
And we need to put in the web page. Okay, so this is the landing page for our resources and materials on our website. And the item to note is circled in green, the EV audit report model, because it's EVs don't save energy. The EV audit report idea stumps a lot of the contractors. So we made up a format for them to use because we require not a lot of information compared to other energy savings measures. So you can come to this page and download this model and use this to fill in the information that we need to work with you on financing an EV project. And then if you forward to the next slide, this is what you'll get if you go to that landing page and download the EV audit report. So it's simply an Excel spreadsheet that you can edit at will, and it contains the categories of information that we need. You'll see we need site details, we need cost details, including your incentives and rebates, any owed or equity, so that we know how much money you're coming to us for. And remember, that needs to be 30,000 or above. Then you'll need to identify if there's a new electrical service being installed or if this is going on an existing service, and some of the information about the meters and the costs for that service. Then the equipment. And a key thing to note here is we need to, in line 27, we need to have you identify the effective useful life of the equipment, because every CPACE term is determined by the effective useful life. That's the maximum period that a person can opt to repay. So if the effective useful life is 10 years, then the CPACE loan can't go out further than 10 years. With EV charging equipment, I don't know that this number is understood fully in the industry yet, but I think people are tending to choose 10 years, and that seems to be supportable. But that's the one you want to focus on for sure, so that we can determine the length of the CPACE loan. And if you have multiple chargers and more than 3, as you see at the top, we've made space for 3, but you can just expand the spreadsheet at will. And also add additional lines if there are other costs or equipment or services that you need to flag for us. Okay, and then let's see the next slide, please. Additional information. Let's see what we have here. Okay, so this is the landing page for our retrofit financing for EV chargers. And below this page, if you go to this page on our website, you can see the link will be there on your slide deck. There's a summary of the program highlights, there are details, and there's also some information on tax credits. So this is a useful page just to refresh yourself if it's a while before you do your first project. And let's have the next slide. This is our current interest rates. And again, you'll notice that, you know, we've got that term in pink, and then the interest rate that applies to that term at this time. And you'll also note that for projects under 500,000, if someone's doing another measure like solar or some efficiency, if you add an electric vehicle charging station to that project, you get a savings off your interest rate for the whole project. Next slide. And we have, I think Elise is going to take your questions, and if you have any.
Yeah, I don't see anything in the chat, but we'll give folks a couple of minutes here. Feel free to put any questions you have in the chat or in the questions box. We'll give everybody a second. And just wanted to mention too, in terms of the interest rates that we just showed, just want to mention that those are specific to the green bank as a financier. So if you're working with a third-party capital provider, their rates may be a little bit different. So just want to flag that those rates are specific to green bank financing that you'll get. And again, you'll get that in the slide deck that we send around after the presentation. Okay, and we just have a question pop up. So do you have options specific to renters? And we don't have anything specific to renters, although we are happy to work with your landlord. I'm not sure if you're an individual living in an apartment, but perhaps, or if maybe you own a business, you know, as part of a strip mall or anything like that. But we can work with the landlord or the owner of the property. And we have seen projects where there's an agreement, you know, between the landlord and the tenants, you know, tenants that want to participate in some of these programs that we can offer. So that question came in from Kathy. So Kathy, certainly happy to speak with you a little bit further about that. And we'll put our contact information up. I think it's on the next slide, perhaps, so we can pop that up too, but you can always contact us about that. And then Patricia asked, who determines the EUL, the effective useful life? So typically that information is determined by the actual equipment that you're installing. There's usually a data sheet or a cut sheet that comes along with equipment that kind of explains the specs of the equipment that's being installed. And there's usually a warranty period or some sort of data point that shows what that useful life should be. But I will also mention that a lot of times your contractor or whoever's doing the installation of the equipment can also help you figure out what that effective useful life is, if there's any question about that. Okay, and then another one just popped in here. If EV charging infrastructure is paired with efficiency or renewable projects, does it count against the savings in the SIR, the savings to investment ratio, since it's an increase in electricity usage? That's a really good question, Angela, and the answer is no. It does not count against it. So we literally will just take the cost of that that gets excluded from the SIR calculation, but not excluded from the overall amount that we're going to finance. So it, you know, let's say it's an EV charging, you've got a solar PV project for 100,000 and EV charging infrastructure for 50. Your amount financed will be 150,000, but the investment part that we're looking at will be based on that 100,000 for the solar PV system when we do the SIR calculation. Okay. And it looks like Christina had answered the question about how do we find the list of participating municipalities. Yep, that's a list up on our website. We'll send that link around in the follow-up email as well, John, but there's a link there. Christina popped that in the chat. All right, any other questions? Feel free, throw them in the questions feature here. You can get those answered for you. While we're waiting for any last minute questions here, so we just put up the slide with all of our information here. So Catherine and myself are the first two on this list here. We're also joined today by Christina Sitso. She's on the financing programs CPACE team as well. You can feel free to reach out to any of the three of us if you have any questions about CPACE or EV charging at all. Then we've got the EV carbon credit program with our colleague Eric Trago. You can feel free to reach out to him directly if you have any questions about how to capture carbon credits. And then we've also listed our colleague on our marketing team, Laura Sobosinski. She's been working with us a lot on EV charging infrastructure marketing. So if you have any questions about that kind of thing, you can feel free to reach out to Laura as well. Okay, And I don't think I see any other questions coming through here. So of course, if any other questions come up, you've got all of our contact info. We'll follow up with an email, as we've mentioned a few times, and we'll send around this deck as well. But feel free to reach out to any of us on this list if you have any questions in the meantime. I think that might be it. Okay, great. Well, thank you all for joining us this morning. We are looking forward to hopefully working with you on an EV charging infrastructure project with CPACE. Thanks so much.